Okay, so, sometimes you see these financial headlines, and they just make you stop and think, wait, what?
Yeah,
I'm
definitely.
going to dig into one of those today. It's about Centene Corporation. That's ticker CNC on the NYSE.
Right. I think
And we're looking at this article from stockaverageCalculate.com. It's called CNC Stock Plunges After Q2 Loss. Here's what investors need to know.
a pretty direct title.
Yeah, exactly.
Yeah.
And our job here is basically to figure out this, this puzzle. How does a company show really strong revenue growth?
hmm
But then its stock just falls off a cliff, like Centene did. It dropped, what, over 10%
Yep.
in pre-market on July 25th.
Yeah, it was a big drop from around $26.76 down to like $23.44 at the open. That's significant.
Right. So we need to understand, what happened, why does it matter, and what are the key things you should maybe take away from this whole thing.
Let's get into it.
So it's almost like a magic trick gone wrong, financially speaking. You got Centene reporting Q2 revenues of nearly $49 billion,
$48.74 billion, yeah.
which is like a 22% jump from the year before. That's huge.
Massive growth, absolutely. And their main business, the premiums and services, that was up 18% too.
Right, to $42.5 billion, mostly because they got more members in Medicaid and Medicare PDP plans, and rates went up. So looks
Mm.
great on paper, right?
Top line looks fantastic, yeah.
But then here's the kicker. They report a loss, a GAAP net loss of $253 million, or negative 51 cents per share.
Which is a massive swing from the $2.16 profit per share they had the year before.
Exactly. And even if you look at the adjusted numbers, trying to smooth things out, still a loss. Negative 16 cents per share this time versus a $2.42 profit last year.
Still a big miss compared to expectations and the prior year.
So, yeah,
Uh-huh.
how do we even start to unpack that? Where did it go wrong?
Well, the real story here, the kind of tension between that great revenue and the sudden loss, it really comes down to one key metric,
Mm-hmm.
the health benefits ratio, or HBR.
Okay, HBR, what happened there?
It jumped pretty dramatically. It went up to 93.0% from 87.6% the year before.
93%. Wow. So that means for every dollar they took in from premiums.
They had to pay out 93 cents in medical claims, which obviously doesn't leave much room for anything else like admin costs or profit.
Right. That explains a lot. Why did it jump so much, though?
It looks like it was driven by higher medical costs, particularly in their Medicaid business,
Right.
behavioral health services,
Okay.
home care, and also those really expensive specialty drugs. Plus, on top of those higher costs, they also got less revenue from something called marketplace risk adjustment.
Ah, the risk adjustment. That's part of the ACA mechanism, right? To balance out insurers with sicker or healthier members.
Exactly. So getting less from that pool also hurt their bottom line. It's sort of a double hit.
Yeah.
Costs up, specific revenue stream down.
Okay, so higher care costs, less help from risk adjustment. But hang on, wasn't there something else, something that happened before this Q2 report even came out? I feel like I remember reading about their guidance.
Oh, absolutely. And that's a really crucial piece here. You're right. The market wasn't just reacting to the Q2 loss itself, bad as it was. They were probably even more spooked because Centene had already pulled its full year guidance for 2025
Pulled it completely. When?
on July 2nd. So weeks before this earnings report dropped.
Wow. Okay. Why'd they do that?
They said their own internal data was showing that ACA marketplace enrollments weren't coming in as strong as they expected. And maybe more importantly, the people who were enrolling represented a riskier pool sicker patients, essentially.
Meaning higher costs down the line.
Exactly. And that outlook led them to cut their forecast by, get this, $1.8 billion in adjusted earnings per share, a huge revision.
Okay, so
Yo.
hat warning shot came first. Then the Q2 results landed and basically confirmed the cost pressures were real.
Precisely. It was kind of a double whammy. The pre-announcement signaled trouble, and the Q2 report showed it happening right now. Management, for their part, they're saying it's an urgent focus to fix the earnings path.
I bet.
Yeah. But they're also stressing their long-term confidence in Medicaid, Medicare, the marketplace. And they said they'd give updated guidance on the earnings call, the one on July 25th. They're also, interestingly, planning to adjust their 2026 marketplace rates.
To try and match the premiums better with how sick their members actually are. Those morbidity trends you mentioned.
That's the idea, trying to get ahead of the cost curve for next time.
That withdrawal of guidance beforehand.
Yeah.
That's really interesting. It just shows how much the market hates uncertainty.
Oh, absolutely. Sometimes the confirmation of bad news isn't as damaging as the fear of the unknown leading up to it. Or, in this case, the combination was pretty toxic.
Okay, so we've kind of broken down the what happened and why it happened. Let's zoom out a bit now. For you listening, Maybe you're just curious. Maybe you follow healthcare stocks, maybe even CNC. What are the bigger takeaways here? What are the implications?
Well, if you step back, this Centene situation is almost a perfect example, really, of that constant battle between growing your revenue fast and actually making a profit, especially in healthcare, where there's so much regulation and cost pressure. For investors specifically, the article points out a few things. Valuation-wise, yeah, the stock looks cheap now. Maybe around 10 times what they expect for 2025 adjusted earnings.
That's a big expect,
Right.
given the uncertainty.
That's the catch. Huge uncertainty around those ACA numbers, the enrollments, the risk pools. Analyst reactions kind of reflect that. Mostly neutral, cautious, a lot of hold ratings.
Did anyone downgrade?
Oh, yeah.
Right.
Several firms cut their ratings to hold or equal weight, and they slashed their price targets too, down into the low $30 range after this news hit.
Ouch.
Yeah. And technically speaking, looking at the charts, the signals are a bit mixed. The article kind of hints that you might see a short-term bounce back.
Like an oversold bounce.
Exactly, because of capitulation. That's when everyone who is going to panic and sell, well, they've already done it. Sometimes that marks a bottom, at least temporarily. But fundamentally, anyone looking at CMC needs to weigh that strong revenue base and the sort of defensive nature of healthcare against these really significant margin problems and the fact that right now there's no clear guidance from the company.
It really does sound like that classic investment dilemma. A potential value, but wrapped up in a whole lot of risk. And the missing piece is that updated guidance.
That's exactly it.
So what's the immediate next step for Centene and for us watching? What should we be looking out for?
The absolute key things are, one, what did management actually say on that July 25th conference call? Did they provide that updated outlook? What did it look like?
We're at the new guidance.
And two, keep a really close eye on those marketplace enrollment figures and any commentary around the health of that population, the morbidity trends. Because as we just saw with Centene, those details aren't just details. They can completely change the financial picture.
Yeah, and that's really the powerful lesson here, isn't it? This whole Centene story. It's more than just one company's bad quarter. It really shows how interconnected everything is in healthcare. How something specific like behavioral health costs going up or shifts in who's signing up for ACA plans.
Yeah, seemingly small things.
Can ripple all the way through, hitting profits, hitting the stock. It kind of makes you think, doesn't it? How often do we really look past the big shiny revenue number to understand what's actually going on underneath with costs and market